The U.S. stock market has been rallying violently off its recent lows, but this comes right after the stock market printed some of the most oversold conditions that we had seen since 2020. A market relief rally is almost inevitable following these kinds of extreme oversold conditions. Even in February of 2022, with the pandemic spreading and global economy shutting down, the stock market rallied by 10% following this extreme oversold reading. The million-dollar question now is whether the stock market will show enough strength to undo the damage that it did during the sell-off. So we have the stock wars. In stock wars, we have a green candle, which symbolizes Jedi Master Yoda. And we have the red candle, which is the color of the lightsaber of the dark side of the Force, used by Darth Vader. Where the SPY broke down below all of its key moving averages, along with some very important levels of technical support. As investors, we cannot have the same approach here as we had in 2024, with this one reason that Warren Buffett just warned us.
A couple of questions about kind of how you see the state of the economy right now.
Well, I think that's the most interesting subject in the world, but I can't talk about it now. I really can't.
How do you think tariffs will affect the economy?
I mean, tariffs are actually, we've had a lot of experience with them. They're an act of war to some degree.
How do you think tariffs will impact inflation?
Over time, they're a tax on goods. I mean, the tooth fairy doesn't pay them. I mean, and see, you always have to just, and then what? You always have to ask that question in economics. Always say, and then what?
So is there an answer for that when people say, inflation persists, consumer prices keep going up, when's the end in sight?
No, prices will be higher 10 years from now and 20 years from now and 30 years from now.
And what do you think about what's happening in Washington right now? About efforts to
I think it's Washington.
Yeah.
It's, technology changes things, all kinds of things, but Washington is Washington. And the problem with politics is that you tend to have to make tiny compromises as you go along.
Tariffs are an act of wars. This explains why consumer sentiment dives to the lowest level since 2022 as inflation expectations jump. The University of Michigan Consumer Sentiment Survey's headline index came in at 57 this month, the lowest level since 2022. That marked a decline from 64.7 in February and 79.4 a year ago. Data published earlier this month had shown a preliminary reading of 57.9. 67% of consumers said they expect higher unemployment in the next year, the highest reading since 2009. Most of the concern in the survey centered on a darkening outlook for the economy's path ahead. The survey's index of consumer expectations fell by 18% from February. On the other hand, families' assessments of the current state of the economy slipped by just 2.9% from last month. The potential for higher inflation remains a key concern among people surveyed by the University of Michigan. Respondents said in March they think prices will rise by 5% over the next year, up from 2.8% expected inflation at the end of 2024. As of now, I would call it an economy going at stall speed, Nancy said. Chief economist at Piper Sandler, an investment bank. The biggest risk, she said, is the fog around the economic policy. The longer the uncertainty remains high, the higher the odds of things deteriorating, she said. U.S. consumer sentiment tumbled this month to a more than 2-year low, and long-term inflation expectations jumped to a 32-year high as anxiety over tariffs continued to build. Consumers expect prices to rise at an annual inflation rate of 4.1% over the next 5 years to 10 years. The data released Friday showed that's the highest since February 1993 and above the 3.9% preliminary reading. They saw costs rising 5% over the next 12 months, the highest since 2022. This explains why the stock market is on very thin ice. The speed of this decline is historic. As Tom Lee notes, only 5 times in history has the stock market lost 10% this rapidly. That's not the bad news. The bad news is that stocks are struggling to bounce back from this decline. As we have seen in the past, a V-shaped recovery is very likely, which is why a lot of investors change to speculators and buy every single dip in the market. In truth, a 10% decline is typically a once-a-year occurrence for stocks. A 10% decline in which the S&P 500 takes out a 200-day simple moving average and fails to recover, it is a big deal. However, you don't need to be an expert at investing to recognize how bad this chart looks. What's really disturbing is the fact that the S&P 500 was rejected so strongly in its attempts to reclaim its uptrend. Unlike the sharp decline in August 2024, when stocks bounced back rapidly, reclaiming their uptrend, this time around the S&P 500 was rejected hard. This is bad news. Had stocks simply struggled at that line for a number of days, it would mean buying power was building. That didn't happen. Instead, the S&P 500 challenged its former uptrend for just a single day before rolling over and plunging hard again. This means the uptrend momentum is gone. Stocks are now on very thin ice. If you have been watching this channel, you will know how low can we get. But you shall not give in to fear or extreme fear like the rest of the investors. Because Master Yoda said, fear is the path to the dark side. Fear leads to anger. Anger leads to hate. Hate leads to suffering. Once you start down the dark path, forever will it dominate your destiny, consume you. It will. On this channel, I may be audacious, but I am a good witch. Like a Jedi, I will use the Force to invest like Master Yoda. In this time of tariffs, trade wars, we need to be more patient. We need to train ourselves to let go of everything that we fear to lose. Letting go doesn't mean sell your stock position. It means letting your mind go somewhere else that is not related to that stock. Or just know the stock you invested has enough power and strength to withstand the economic storm this trade war unleashing. Like Lululemon, a stock that I am buying on the way down. It's a rock-solid business, not going anywhere. The Trade Desk, another high-quality profitable business, it's good to own them for cheaper prices, so I embrace the crash because I already took profit on all my stocks when they traded rich. When I feel like extreme greed is in the air, I sell, which puts me in a position of power, and I can feel the force is with me. At the end of the day, we don't want to think about money. We want to enjoy the reward of money, but we must learn control. So I am letting go and I fear nothing. What about you? Are you relieved the stock market is coming down? Let me know in the comments, and may the force be with you.